right, welcome to Talking Investing. I'm Tom, and as always, this is not financial advice. Today, I want to talk about some huge news regarding cryptocurrency and staking and the potential that the SEC may ban staking in the United States. This controversy has been building for a while now. The last couple of days, it's really heated up, and I want to talk specifically about a case with Kraken where they are no longer going to provide staking services in the United States. So our stats show about half of our viewers have not yet subscribed to the channel, so we really would appreciate if you subscribe, and if you want to, you can hit the notification bell and get notifications every time we do a video. Also, you can join the channel by hitting the join button right next to the subscribe button. There's a massive amount of member-only content building up, and there's also a private Discord for members where we get to discuss things. In addition to that, we do a members-only live stream once a week, so we have a lot of fun, and it does help support the channel, so I appreciate everybody's support. Let's talk about cryptocurrency. I want to start with Kraken. Okay, so let's talk about what happened. This was an article yesterday afternoon from MarketWatch. SEC's Gensler puts heat on crypto staking as Kraken pays $30 million fine. Okay, so it's not just that they paid a $30 million fine. Federal authorities charged Kraken for failing to register the offer and sale of their crypto assets staking as a service program. So those were the charges that the SEC had made. Kraken, one of the largest crypto exchanges on the market, and I believe it's the third largest crypto exchange. Kraken will be paying $30 million to settle charges brought on by the U.S. Securities and Exchange Commission, according to a press release from the SEC on Thursday afternoon. The charges are for failing to, quote, register the offer and sale of the crypto assets staking as a service program, end quote, where investors use the crypto assets on Kraken in exchange for annual investment returns as much as 21%. To settle the charges, two Kraken entities agreed to immediately stop offering and selling securities through crypto asset staking services or programs and pay the fine. They are now no longer going to give staking services in the United States, period. So this situation is bubbling up big time. The CEO of Coinbase did put out 6 tweets in a row regarding this issue. He is saying that he's heard rumor that the SEC is looking to ban staking in the United States. That would ban all crypto staking for all crypto exchanges in the United States. So we don't know that. That's not confirmed. It's certainly not rule or law at this point. And it's an important distinction to note that Kraken did not even admit to doing anything wrong here. They simply just settled this matter and agreed to stop staking in the United States. So this was not an admission of guilt. This was just a settlement. So really nothing is defined on this yet. It's all still yet to be determined, but this really muddies the water between Kraken agreeing to stop doing this and, within the same 24-hour period, the CEO of Coinbase, which is the largest cryptocurrency exchange in the United States, their CEO coming out and saying that he thinks that the SEC is looking to ban all staking in the United States. This is understandably sending some short-term shockwaves through the system. Ethereum was down over 4% yesterday. Bitcoin was down over 4% yesterday. Interestingly, Bitcoin really doesn't even have anything to do with staking. Bitcoin is a proof of work. This would actually have no ramifications on Bitcoin at all, other than the fact that it does have ramifications on the ecosystem that Bitcoin lives in, which is the cryptocurrency ecosystem. Ethereum is really the big question mark here, in my opinion, because Ethereum just moved to proof of stake. This was a fundamental change, and if the US government is going to ban staking, obviously that's going to have some ramifications. Now, there are other ways that Ethereum is going to be able to continue their staking, and so I want to go to a different article. Okay, this is from Bloomberg. U.S. crypto staking crackdown seen as, quote, a huge gift for decentralized services. So this is a part, I think, of the big confusion that most of the world has yet to really understand. We're just only now in the very early days of cryptocurrency. Cryptocurrency technically is supposed to be a decentralized thing. These crypto exchanges are centralized. So particularly something like Coinbase, which is actually a publicly traded company, falls under the SEC very clearly. The SEC is trying to get all the other cryptocurrencies, with the exception of Bitcoin, to fall under the SEC's rule. So that remains to be seen. We're a long way from finding out whether or not that's going to happen or not. But the other half of this world is the decentralized services. Okay, so this says decentralized finance apps such as Lido, Rocket Pool, and Stakewise may benefit from the U.S. Securities and Exchange Commission's crackdown on crypto staking services if they avoid a similar clampdown. The SEC alleges that Kraken's staking services were illegal sale of securities. So that's their argument. That's where the SEC is coming at all of this. They're saying, other than Bitcoin, which they've agreed is going to be classified as a commodity, they're really coming after the vast majority of all the rest of the cryptocurrencies. Gary Gensler, in particular, seems to believe that cryptocurrencies act like securities, and so they therefore should be regulated by the SEC. Okay, decentralized finance, or DeFi. So this is different than the crypto exchanges that we see. So the ones that I mentioned, Binance and Coinbase and Kraken, these are centralized organizations. So decentralized finance, or DeFi apps, let people trade, lend, and borrow without intermediaries and often anonymously through the use of automated protocols. Many in the DeFi community argue that the autonomous aspect pushes the apps outside the guidelines of regulators since no individual benefits directly. So it is a different process, and I really don't see, practically speaking, how the SEC could get their hands on the decentralized portion of what goes on here in staking. Their competitive advantage is an innate resistance to regulatory action, something that mattered little in the absence of such action. But now, obviously, we're seeing the potential for this action, the potential for the U.S. government to say that staking of cryptocurrency is going to be banned or regulated in some way heavily through the SEC in the future. In the short term, it's definitely good news for on-chain direct staking and decentralized platforms, in the sense that people who want to stake have to use those options now, said Austin Campbell, adjunct professor at Columbia Business School. So the one clarification that I think is important is the SEC, so far what they are talking about is they don't like this with retail investors. So even if they were to do this ban on staking, this would not stop validators on the Ethereum chain from putting up 32 Ethereum and becoming validators and essentially staking in that manner. What this is targeted at is these centralized organizations having smaller retail investors be able to put any amount of money in and essentially be, quote unquote, guaranteed a return on their investment. So I will say, for me personally, my perspective, and again, this is not financial advice, and I have no idea where this is going to all end up. I suspect usually these things end up in some type of middle ground compromise. One of the problems, and one of the things that's giving the SEC a lot of fuel for this, is all of the disasters, the FTX disaster being the most recent, but the series of disasters on these centralized crypto trading platforms. And one of the main problems with them is they have offered exorbitant returns on staking, and it really never made any sense. I have talked about this over the years on the channel. These returns at 15 or 18 or 20%, I'm just not sure what the methodology is behind that. I'm just not sure how that's anything other than a Ponzi scheme, because there's really no other investment that you can make that has that kind of guaranteed return. So the problem with a guaranteed return is you're putting your coins on an exchange, so you may never even get your original investment back, which is what happened to an awful lot of people. So that is why this situation has bubbled up. It really is a valid question, so I'm not weighing in on this one way or the other. I do think there's got to be some middle ground, particularly, obviously, Ethereum's the second largest cryptocurrency in the world. It is on proof of stake, and to me, they would be able to comply with some reasonable SEC regulations and rules if that's what ends up happening. But for now, this is a battle, and Gary Gensler has dug in pretty deeply. He's already investigating Coinbase for their staking procedures. So this question will continue, and as it looms over the cryptocurrency world, this is just another piece of FUD that is driving down cryptocurrency in the short term. So cryptocurrency had a very big rally in January. It seems like that rally ended just about the end of January. We've gone sideways and then had a little pullback for the last 2 or 3 weeks. So we'll see where we go from here. The last point I'll make or reiterate is that Bitcoin is proof of work. So this does not affect Bitcoin in any way, shape, or form. There is no Bitcoin staking. So one of the things that happened yesterday was Bitcoin was down 4% with the rest of the entire cryptocurrency universe. So at some point, I'm not sure if people are going to pull these things apart and understand that, Bitcoin acts independently of the staking process. So I would love to know what you guys think. Let me know in the comments what your thoughts are on staking, where you think it's going from here. Do you participate in staking? Most specifically, how do you think this is going to affect Ethereum and the U.S. retail traders? For those of you in the rest of the world, this is not affecting you. This is the SEC coming after staking in the United States only. So all of these other platforms, and Binance long ago separated the two, they act independently in the rest of the world. And then they have a Binance USA that follows the rules in the United States. So maybe a lot of the other larger exchanges will have to follow that example. Coinbase really can't do that because they are a publicly traded company in the United States, so they're automatically under the rules of the SEC. So those are my thoughts on this. Just wanted to bring everybody up to date. I do think this is going to be a big issue that still needs to be resolved. Please subscribe to the channel. And if you enjoy this content, please consider joining the channel and becoming a member. We have lots more content in the members only section. You can check out some of the content right next to me on the screen, and I will see you in the next video.